Hey, everybody. Welcome to the AI and EDU investor panel. We're here to shed some light on how investors are thinking about AI in education, explore broadly where there are opportunities, and to talk about how AI might change the landscape for VCs. I'm joined by a really amazing group of panelists who represent the largest EdTech VCs and some of the most innovative EdTech VCs. We're going to try to save some time for questions in the end, so please don't be shy in the Q&A box. We'll start by having each panelist introduce themselves and talk a little bit about what their company's AI strategy is and highlight any recent investments that they've made. So I'll kick us off. My name is Mike Berlin. I'm a partner at Workshop Ventures. A little bit about Workshop. We're a venture studio that's focused exclusively on education and climate. We do two things. First, we invest in traditional check writing at the pre-seed and seed level. And second, we partner with a really small number of founders, essentially acting as co-founders, contributing capital, our engineering resources, and our operational resources to help get companies off the ground. In terms of our AI strategy, I wouldn't say that we have one explicitly, but really our position is to try to be nimble, learn as much as possible by putting ourselves in the situation where we're able to invest in ways that we can learn. The way that expresses itself is the companies we've been attracted to invest in so far have been small capital efficient businesses that solve real user pain points and are run by seasoned operators. A good example of that is the company Diffit. And on the company incubation side, we're looking at two things. One, are there pieces of AI, education-specific AI infrastructure that will accelerate the larger industry's adoption of safer and more efficacious solutions? And two, what are ways that we can help K-12 leaders better manage AI risk and encourage experimentation? So let's go to our panelists. I'll start with Atin. So start with introducing yourself and then answer those two questions.
Sure. Thanks a lot, Mike. Thanks for having us. I don't believe anybody's ever called VCs innovative, so I appreciate the kind words. Hi, everyone. My name is Atin Batra. I'm a director of impact investing at the ECMC Group's Education Impact Fund. The Education Impact Fund is a $250 million vehicle that leads and invests at seed through Series B stages in startups that are operating in and innovating on, and startups that are truly innovating on higher ed and workforce training. Most recently, I actually ran a solo GP firm that was also investing in education and future work, but with a slightly broader lens. With respect to our thesis around AI, I think broadly our view currently is, this is the ECMC Group's view, that we're still in our first innings really of what the application of AI will be in education in particular, and we're still trying to gauge where exactly the best value drivers will sit. And we have made investments in this space. In fact, one of our best performing investments is ChalkTalk, which is not a recent investment by any means, but ChalkTalk has actually been operating for years, even before Gen AI took over the conversation. ChalkTalk in particular actually helps teachers to prepare lesson plans that are personalized to the student population that they actually have in their classrooms. And all of that is done on the back of a feedback loop that ChalkTalk has built by doing regular assessments of the students. And that sort of builds and feeds back into the AI model that generates the plans. So I feel like that's one of the things that we certainly point to as an example of something we're super interested in, which is how do we make teachers' lives easier in the long run, and in many ways lead to effective teaching and learning. That's really the key word for us. Anyways, that's us, and I'll let you pass on to the next person.
Let's go to Jomayra.
Hi, everyone. I'm Jomayra. I'm a partner at Reach Capital. We're an early stage venture fund focused entirely on education and the future of work, generally leading or co-leading seed or Series A rounds. That's really our bread and butter. When it comes to an AI, I would say our core investing strategy hasn't changed. We're looking to invest in great teams and founders solving big problems and building products that are 10 times better than whatever existing solution exists. And so that hasn't changed. We continue to look for that. But to the point that I think Mike was saying was, we want to really focus on learning and staying close to end users that we're trying to serve to better understand how their behaviors are changing, what they're looking for, what they want, how they're thinking about AI. And that's really like our core focus right now when it comes to AI. And to help facilitate that, we created what we call the AI Learning Catalyst program, which is focused on making small checks or small investments in very early stage. So think pre-seed companies that are AI first or AI driven. And the core focus there is really to learn as quickly as possible, get a lot of exposure, and see companies across the spectrum. Because as Atin was saying, the space is changing really quickly. We're in early innings. And so we want to focus on learning as quickly as possible. One of our early investments, or we've actually been investing in AI for quite some time. So we have companies like TeachFX in the portfolio that's been in our portfolio for years, as well as many others. We were investors in Gradescope and RightLab, et cetera. But one of our recent AI-driven investments is a company called CuriPod. And the best way I can describe them is honestly, they're an AI-driven Nearpod. And if you know anything about Reach, we were one of the first institutional investors in Nearpod, which is a lesson content delivery platform. And so it was a space and category we knew really well. And this is a company that's coming from an AI-driven, AI-first perspective coming out of Oslo. And so we were really excited about what they're building, and we've seen a lot of success and seeing it resonate a lot in the US as they've expanded here. So that's a little bit about us and some of our early initial bets.
Go to Katelyn.
Awesome. Thanks, guys, for having me. My name is Katelyn Donnelly. I'm the founder and managing director of Avalanche VC. We invest pre-seed in companies that transform how people learn, earn, and own behind massive trends. And our thesis on AI and education is that AI is just the next generation of software 3.0. And it's in the water. It needs to be embedded in every product that is going to be successful. And in education, I think there are more services-based business models and technology-based business models, and we expect that any technology-based business model will have an AI component to drive efficiency or effectiveness of that product. So it's like table stakes at this point. One of our long-standing early bets at Avalanche was a company called Prof Jim, which is deep in the generative AI space for doing content creation, and we recently did a follow-on into that company. I think Deepak is a speaker at this conference, so you've probably heard from him. And then we also led an investment in Offer.ai, which is a job platform that aligns incentives with guaranteeing jobs for the people that they take on that go through their program, and it automates the job application process and resume tailoring. So really saving people time in their process of finding their next opportunity. That's me and what we're invested in, and happy to chat more.
So take it home, Amit.
Great. Thanks everyone for having me here. My name is Amit Patel. I'm one of the managing directors at Owl Ventures. We are an EdTech focused fund. We invest across the education spectrum. So everything from early learning all the way to adult learning, and as well as what we call the EdTech Plus category, which is EdTech plus other sectors like FinTech or Health Tech. So a good example of that is Hazel Health, which is bringing telemedicine services to the K-12 sector. So that EdTech plus Health Tech category. We invest domestically, meaning the US as well as internationally, and have close to 24 companies internationally as well. And we're stage agnostic, so we're doing everything from early stage to growth stage. In terms of our philosophy on AI and EdTech or thesis, I would say echo a lot of what some of the other panelists have said. This intersection that has existed between AI and EdTech is something that we've seen for quite some time. Now, obviously the new innovation that's happening is bringing in generative AI and how EdTech is leveraging that. But in terms of companies across the portfolio that have been at that intersection of AI and EdTech, companies like Quizlet, which was one of the featured partners when OpenAI first kind of highlighted some use cases in the education sector. We have companies like Amira Learning, which is focused on oral reading fluency for early elementary school students. I believe there's a couple of folks that might be speaking at the event today, including Jan from Workera, as well as Rajan, who started Chiron. In the case of Workera, focused on helping companies assess kind of talent when it comes to these emerging technologies. And then Rajan at Chiron working on helping asynchronous learning experiences for kids feel like synchronous learning experiences. And so that gives a little sense of the types of companies that we've invested in. And then I just want to plus one kind of Katelyn's comment in terms of the table stakes. It's been really remarkable to see how quickly companies have incorporated AI into what they're doing, both customer facing as well as internally. And it's also to the point where I can't even think of a single company in our portfolio that doesn't have something related to AI that they're leveraging. And so it has really become a part of the fabric of what every company is doing very quickly.
Great. Excited to have you all here. I've heard two themes from all of you. One is that it's early innings. Two, that AI is really an extension of technology in general. So the first question is, when you're all looking at companies to evaluate for investment, are there different criteria that you would apply to an AI startup than just a startup writ large? Any volunteers to start?
Go ahead, Joe.
I was just going to say, I would say that fundamental criteria I don't think has really changed for us. As I mentioned, as when I was introducing ourselves, we're effectively looking for the same things. I will say, because when it comes to Gen AI, we are in what I would describe as kind of frenzy period of there's just a lot out there that's popping up at the same time. And we're seeing a lot of just like fast followers or copycats of very similar ideas that are targeting similar spaces. One of the areas we spend a lot of time on is less on growth, because growth does not seem to be a problem in this space. There's a lot of adoption across the board, and we're diving a lot more deeply into retention and engagement and stickiness, as we would with any product. But I think especially now, given that AI is in the zeitgeist. So the core criteria of what we look at when it comes to team, market, product traction, those things haven't changed.
Nothing to add to that. Like literally nothing to add to that. I was going to say the same thing, which is when you're looking at any company you want to invest in the best companies out there, and the characteristics are the same. You want a great team. You want that company to have a moat around its technology. You want the team to have a focus on their customers, focus on the outcomes that they can drive. You want the companies to have sustainable unit economics. I mean, those things don't change whether you're using AI or not. I think if there is a difference, it's a slight difference to say, when we're looking at the team or the technology, we want the team to have experience in AI specifically, because if you're just using off the table models that are available from OpenAI or any of the other providers, we don't think that is enough of a moat. You have to be able to actually build on top of that to build something that is proprietary to you. And to do that, you have to have experience in AI. So I think that's the only thing that I would add to everything else that you look at for any other company, is just, does the team have experience with AI itself? And can you actually build on what is available in the market so that you can build a proprietary moat? That's about it.
Yeah, the topic of moat is a good one. Something that a lot of us, I'm sure, grapple with AI startups. What are the moats that you're looking for? Katelyn, pick on you. Why don't you start?
Yeah, well, I think one of the biggest issues always in EdTech is distribution and sales, because people generally don't win on a 10x better product. They're like, can you actually sell? Will you have a buyer? Will the buyer buy it continuously? And the problem with D2C EdTech is that there's usually built-in churn. Like, people learn something or they graduate, then they churn out. And so I think the question on AI is, how much will the incumbents who already have their sales channels and their distribution in place be able to adopt AI and take the wind out of the sales of the products that are kind of play the freemium game, where they have a lot of distribution, lots of usage, but maybe aren't totally charging, or it's pretty easy to churn when people begin to be more price conscious or cost conscious, like they always are in education, and think, well, how do I consolidate down from 100 tools to 10? And if I already have Google Classroom and it's doing these things, why do I need the extra point solution? So I think that's something to think about. That moment's not here yet, but it definitely will be.
Yeah, and I think just adding to that, what I would say is starting to take into consideration not just what is the AI application that's going to be used, but usually when you're talking about a lot of these tools, it's a much more comprehensive platform that's being offered, right? It's not just a single chatbot or something like that, right? There's other kind of dashboards that you're creating. There's other workflows that you're taking into consideration, especially if you're talking about like K-12 ecosystem. What does the day-to-day for an actual educator look like? How will this get incorporated into the classroom? There's different constituents that need to access this. How are you going to provision that? How are you going to think about that and take that all into consideration? And so you think at a moment when a new technology is kind of introduced into an ecosystem, it's very easy to like kind of focus on what are the benefits associated with the new technology and not take into consideration, well, okay, how does this actually sit in a broader platform and how will that succeed or fail when it comes to adoption?
And frankly, in many ways, that, sorry to jump in here, but I guess that also helps. That mindset of having a comprehensive perspective is what will help you build the moat, because that actually will feed into that data flywheel, will feed into building a model that is customized to your use case and therefore has better suggestions, is not hallucinating, is not giving you poor results. And all of that will then just feed into the moat. And so what Amit's saying is absolutely correct. Like, I think that if what you're trying to do is just build a single point solution, that just is not going to be sustainable in the long run. That's probably not what we as investors are looking to back as of this moment. You have to have a plan for how it integrates with everything else that a school is using. I mean, the craziest stat on that is, like, I read 3,000 plus tools are being used on average by every single district. Just imagine that, 3,000 plus technology tools. That's crazy.
Yeah, it's a crazy stat, and that stat is even in a pre-AI world. That's just a post-pandemic stat. So now, question to Jomayra, you're right there soliciting pre-seed, very early AI companies, and you must see a ton. So I guess the question is, are there segments of the market where you're seeing sort of an overabundance of startups? And are there segments where you're seeing a disappointing lack of new startups?
So I think we may get a pitch for an AI tutor every day or AI homework helper probably every single day. It's funny because the form function all looks the same too. And they effectively have similar numbers and they're kind of in similar places. And so it's just not a bad thing. There clearly is a need there. There clearly is a market there. And so there's an obvious AI application there. I would say there is an overabundance of companies in this space, but competition is great in the sense that ultimately something will shake out. In terms of the disappointing lack, most of the models that we've seen have been primarily direct to consumer models. And so we've seen less of leveraging the concept of an AI tutor in the context of schools or B2B, or actually integrating it with what a child or student is learning and their actual curriculum. I think some of these companies have that broader vision of getting there, but right now most of them start consumer. And when I think about where there is the greatest level of need, schools have a massive labor shortage, and not just in the US. If you think globally, it's one of the biggest barriers to providing great quality education across the board. And so for me, there seems to be obvious AI applications there. And so we've seen less of that and a lot more of what I would call the photo math copycat. And so not saying that's a good or bad thing, but definitely one where we've seen an overabundance.
Same question to the rest of the group.
Yeah, I used to add in some areas, and I think this is certainly with AI, but I think it also just in general in EdTech, where we haven't seen as much kind of EdTech solutions being created. One is certainly on the early education side. I think more, it would be, everyone I think knows the stat that, like, if you think about where are you going to get maximum ROI in terms of investing in someone's learning journey, the earlier that you can do that, the greater impact it likely has to make over the course of their lifetime. I think it's also trickier to create solutions at that stage because parents are always nervous about, especially young kids, being in front of devices and how much time they're spending. There's also just the practicality of, have two young kids, and I know like how much a device can actually hold their attention depending on their age. And so creating like kind of actual ed tech product that, probably is going to interact with the parent and require the parent to be the one that is actually kind of participating in some form or fashion in whatever educational activity is happening with that child, especially again, if you're talking about very young children. So I'd say that's one area where we would love to see kind of more companies. And then the second is kind of special education sector. I think that again, there's a massive, to Jomayra's point, there is a massive shortage of educators. There's also a massive shortage of therapists and other folks that kind of are needed to serve those students. And so any type of technology that could help solve that problem in the education system, I think would be fantastic.
The one thing that I will say to that is, and I'm absolutely right, I think the early childhood education piece, like there's just very few companies that are tackling that. And I've got a 2-year-old, so I know that I'm just looking for opportunities to bond with my kid more. And some of that will include technology, but I think that the kind of technology solutions that are available right now are very singular. Give this iPad to your kid and let them play with it for the next hour. Or, there isn't as much interaction. This is what Amit mentioned, between the parent and the kid playing with it together, so that there is that relationship building also that is happening. And so, not out of ECMC, but out of my previous fund, we invested in a company called Nurture, which I think Jomayra has also looked at in the past. Nurture are doing exactly that. They've built an educational game that is played on the Apple TV interface, and that is specifically meant for both the kid and the parent to play together. So you're also embedding that in-person relationship between the families. And frankly, let's be honest, we're all young parents. As more and more people become parents going forward, we're going to struggle with just how much technology we want to include. How do we build those relationships with our kids when we ourselves get distracted by technology? So I think there has to be an opportunity to build solutions that find a solution, find a Goldilocks or best case scenario of all of that.
I'm most interested in AI assessments, like that are assessing skills or development opportunities. And I haven't seen so many of those, but that's such a key part of like determining mastery and where people are leveled, and the technology can be much more seamless than it is today.
That. So changing it up a bit, what is the role that we as investors or startups in general can play in ensuring the responsible use of student data and ethical AI practices? This is for anyone that wants to jump in.
I can jump in real quick.
Go ahead, Jomayra.
Sorry, go
ahead. Go ahead, Jomayra.
I think about the way that with Reach, it was really important for us to play an important role in making sure that our portfolio companies thought about and measured their impact. And in the ways we did that was, one, part of just even our diligence process, right? Like even asking those questions, looking at those numbers, but then two, post-investment, actually providing the resources and the thought partnership to be able to do that effectively. And I think that translates well in this regard as well, in this sense too, right? Part of our job as investors that care about responsible use of student data and ethics is we need to ask the questions during the diligence process and make sure those policies are set up, or there's a credible path to getting those set up very shortly. And then the second piece is, how do you increase the rigor around those as the company starts to mature, in the same way that we think about increasing the rigor of impact measurement as the company starts to mature, and providing the resources and thought partnership for companies to be able to do that and to shorten the learning cycle so they don't have to figure it out themselves. So that's kind of our role.
That's great. Related to what you said, I'm going to ask the first question from the panelists. This is from Jacob Cantor. Apologies, I'm still trying to figure out how to broadcast the questions. But Jacob asks, how much focus is going on during the due diligence stage on talking to end users when thinking about making an investment?
I'm happy to chime in and start things off. I would say a pretty significant amount. I think just building off of what Jomayra just said, like probably like 3 areas when we're looking at a company that we typically focus on whenever it comes to diligence. The first area is just like kind of business fundamentals, like what has been like kind of the historical performance, what's the potential projections, unit economics, all of the kind of financial metrics and things like that. And then the second would be the team, especially, you're talking about early stage investments. You're talking about working with these folks for a number of years and partnering with the founders for a number of years. And then the third, what Jomayra just said, is like kind of having some type of thesis around impact or efficacy associated with the product. Now, that doesn't mean every company has to have done some type of RCT or anything like that, but understanding kind of what is the thesis around that. And so throughout that, like kind of one of the things that we do across those 3 areas that I just described is really talking to end users when it comes to understanding. And that is done not just by kind of the customers that the company actually puts us in touch with, but also kind of leveraging our own network of whether it's superintendents, educators, teachers, and other folks in districts that can verify they view the world and believe that kind of whatever the company is sharing with us is also kind of they think about the value that product is driving, budget that potentially they could dedicate to solving this problem. And the questions that we like to ask is like, is this like a top 3 problem that you need to solve, right? Is this number 10? because then, we've kind of been talking about whenever it does come to budget cuts or trimming down the number of products that you're going to be using, it's going to be very important to be kind of top 3 in terms of driving real value for your customers.
That's great. So again, related to something that you just said, Jared Stein asked a good question. Constrained K-12 and higher ed budgets seem like a strong counterforce to AI innovation. How does this affect your thinking about EdTech business models or pricing?
It's a huge component when we're trying to do our projections and trying to think through companies to invest in and what we can underwrite in terms of their future results. There's no doubt that that's a huge part. In fact, the other piece that I think we're missing here is just the pandemic relief funds and the cliff that we're fast approaching next year, which is when all of that funding will go away. And yes, some of the schools and institutions may have signed multi-year contracts today, but what happens 2 years later when they come up for renewal, when they won't have those line items? So I think as investors, we'd all be doing a disservice to our companies if we don't actually dig into that. And I know that all of us do. So that's a big, crucial part of figuring out whether this business is sustainable. And the other thing that I will add to that is, and this is also where something, again, that Amit and I were speaking about earlier, which is how do you think about companies that have a comprehensive perspective or mindset in terms of looking at different solutions and how they interact? Because that kind of interoperability can also play into the budgets. Like, is there a way that you can build multiple use cases into the same product and then perhaps eat the budget of someone else or whatever, right? Like there are ways that some of that bundling is going to happen in education now going forward, is also driven by the budgets that we have access to.
Yeah, I think the other thing that I would add to what Atin's saying is aside from the budgets, if you just look at the demographic trends that's going to happen over the next a decade, there's some pretty significant shifts that are going to happen. And one trend is, for example, expected that there will be 1 billion more secondary higher education learners for the coming decade. And that's not a trend that, regardless of where budgets are, that's not a trend that's going to stop or change. And so the question is, which companies are actually kind of setting themselves up to just work with K-12 and higher education systems, but also starting to think about in certain parts of the world where, depending on what the age of their population looks like today, what it's going to look like a decade from now, what are the solutions that are going to come up that are actually going to serve those populations, because they're probably not going to look like what has been historically the case. And so I think that is something that we definitely look at and get to evaluate and see which companies can position themselves to take advantage of kind of is going to be unavoidable in terms of, hey, these 1 billion plus learners are going to have to get served, and how are we going to do that? And it's probably not going to be in the way that we've done it historically.
That is a great point. Going back to something that you said, Amit, about efficacy and improving impact, you mentioned RCT trials, which of course are the gold standard. But what early stage, what do you look for, and what can an entrepreneur really do to begin to demonstrate efficacy, and how does that change as a company scales post-funding?
Happy to offer some thoughts, and then would welcome the others, because I know a lot of you do work in this area. But what I mentioned was early stage companies, it just doesn't make sense for them to do RCTs because probably they don't have the number of users, or they don't have the budget, or the stability of their product isn't there, and it's changing so fast that you can't actually kind of run the RCT in the way that you would. I think what we are looking for, though, is kind of efficacy measurement isn't an afterthought. It's not something that's just haphazardly put into marketing materials. It's not something that only one person kind of is about at the company. It is something that the leadership is thinking about. It is something that is kind of a part of the practice of the product team, of the engineering team. It's how are we getting feedback on a relatively consistent basis from the users that we are serving, from our customers, and then incorporating that back into whatever R&D strategy that we do have. And so kind of demonstrating that and showing us that is something that's really important, something that we look for, especially at those earlier stages when, frankly, a lot of that efficacy data is more qualitative in nature as opposed to quantitative in nature. But I'll let others comment as well, because like I said, I know a lot of you do work in this as well too.
I mean, I think the only thing I will add to that is fuel as investors, a lot of times it falls upon us to actually push the founders. I think a lot of founders are in education because they know that they're making an impact and they want to make an impact, but impact measurement is not the same as making an impact. And I think it's upon us as investors to think about the impact frameworks, the impact measurements, what are the best practices around that, because also not every founder will have an understanding of how do you actually do that kind of work? Measure them in a statistically significant and defendable manner. I know that Patel and Reach and even at ECMC, we put out an annual impact report. And in fact, so much so that we have a team of 6 where one person, 100% is dedicated to impact. And that's one of the first things that we do when we invest in a company is we schedule an impact measurement call where at 60 minutes, we're just going to talk about how we can help you build an impact framework. And if you have one, how can we make it better? And so like for a lot of us as investors, this is actually one of those pieces where we can actually provide value add because this is not something that a founder will have a bunch of experience in. Sorry,
Yeah,
Jomayra, I know you wanted to say something, but yeah.
No, I totally agree with what both of you said. I think it's also important you're investing in the early stage not to get too religious on what counts as impact measurement. So to Amit's point, like an RCT doesn't make sense for an early stage company, but even looking at things like NPS, testimonials, engagement, right? Like if people aren't even using your product, but you have an amazing impact framework and you have a high efficacious product, you're not really driving impact. And so there are other parts that we think about and can look into. We're considering impact at the earliest stages. But as you both have shared, the important piece is this something that the founder cares about? That is table stakes for us. And do we have a theory of impact or a theory of change that we can then build upon as the company matures?
Love that, the theory of impact. Atin, love that about the person really pushing the entrepreneur and thinking about impact measurement. Going back to something Jomayra said at the beginning, this is a question from Daniela in the audience. Jomayra, you mentioned an overabundance of AI tutors related back to Katelyn's point about schools and universities consolidating. For the group, are you all expecting tutors to become a feature of established and potential consolidation in the space?
One thing I see a lot is you're like, okay, what tutor are you actually, what's the tutor doing? And it's like, are they just a faster way of getting information and like faster, more reliable way of getting information than Google search? Or are they a way of just solving homework problems faster? Like, what's the job to be done? And I think the biggest competitor to a lot of these AI tutors is OpenAI, is ChatGPT. Like if you ask kids today, like high school students, university students, like what do you use? Like most of them use ChatGPT, and those models are just getting better and better. And so I think that's the biggest competition. And it's so easy to like put a chat bot into an existing incumbent or an LMS or something. So that's for me the burden of proof.
Oh, I totally agree. And I think the other piece is like, are you expecting tutors will become a feature? The truth is they already are. Chegg has Checkmate, Khan has Khanmigo, Quizlet launched its AI tutor. Most of the incumbents, if they haven't launched it, they've marketed it. And so it's already here. It already exists. And to the point Katelyn was making earlier in the conversation, AI, if you believe like one of the defensible or the things that can make a strong AI is the data, then you would presume like that would lead you to believe that an open AI would be the best solution or one of the existing incumbents, like the benefit goes to them. And so then it requires these new players to truly build a different product in a lot of ways, and solving almost like a different need than some of the existing solutions. Otherwise, the existing incumbents have the distribution and the brand name recognition, and so they effectively, are steps ahead.
Great. So pulling up something in the chat related to that came from Raheem. Curious how you all think about the thesis that AI innovation is moving too fast and that there's some merit for waiting 6-12 months for some of these innovations to mature before deploying your capital.
So I think on this, like, I'd answer this in 2 ways. One is a number of us have highlighted like this intersection of AI and EdTech has existed for quite some time, right? I think all of us have examples of companies that we've invested in several years ago have leveraged, so like taking into consideration the building blocks of AI, like machine learning and natural language processing, right? Kind of companies have been doing with that. It's been happening for some time now. I would say, things that we are being cognizant of is, any type of cycle, you're always kind of thoughtful in terms of like valuations actually make sense and kind of be careful not to get too caught up into that. Well as second, to really differentiate between first mover advantage versus something that is actually a long-term competitive advantage. And so those are the things that we are kind of into consideration. We kind of had discussion. I think at the end of the day, though, as all of us have kind of stated, like probably not going to be a company that we meet or a company in our portfolio that exists that doesn't have some type of AI incorporated into what they're doing. And so it's quickly becoming a place where it's just like, he's coming into like pitches talking about mobile applications or the fact that they're being hosted in the cloud or something like that. And so I think it's expected that you are going to have some type of AI related strategy incorporated into what it is that you are building.
One of my pushes to founders is, so Avalanche, we're probably the smallest fund by far here. And I love companies that are capital efficient with small teams who use the technology to grow fast without having to become a behemoth. And I think if you're a founder, you really need to be thinking, I really need venture capital. Does this really need to be a venture-backed model? Or like, can I scale it with maybe one round of capital or run it pretty lean? And then what's my exit strategy? Because also in EdTech, there's very few IPOs. Like you're probably not going to be the next billion-dollar company. So, what are you trying to achieve and what is the capital need that you have? Because that would be my push on some of the AI innovations is like, you don't have to be huge.
Yeah, +1 to that. So on the clock, I want to end us with one question, which is to have us turn inwards and have each of you make a prediction on how AI could impact the funding landscape. How will the job of being a VC that invests in EdTech change? How could the amount of funding that companies need change in 5 years' time? So we can all make a prediction. Bold is good, doesn't have to be bold. We start with Atin.
You didn't talk about that in pre-call. Sorry, you just got us out.
Need to keep you on your toes.
I didn't think about it. I think, obvious advantages to having AI and all of the innovation that's happening, making the more work easier. Use Affinity, and in many ways, I would imagine that Affinity, which is a CRM for VCs, is doing, I'd say, about half of what an analyst used to do in terms of just collating information and bringing it into one place. So there's definite advantages to it. I think the other way to think about it is it may not change anything at the earliest of stages, because at the earliest of stages, you're investing in human beings, and a lot of gauging how a human being is as a founder is really about the nonverbal cues and not the verbal cues. And this is I was listening to a podcast yesterday, which I think was on Katelyn's, which, by the way, huge props. Everybody should go and listen to that podcast series. But I think there was a podcast episode which was about how an executive coach works with a founder. Yes, there's a lot of AI executive coaches, but you cannot replicate all of the non-verbal cues that a person is gauging and receiving from the other person at a single one-on-one conversation. And so I'd say the same thing applies to VC, at least in the early stages, where it's really a lot about making a bet on the founder than the business or any of the data that you're gathering. And so it's not going to change. I just don't think that that's going to change.
Let's go, Jomayra.
Yeah, I was thinking about it because I was like, this is a surprise question. The question is how it's going to change fundamentally our job. I think just like with all of our companies have thought about how to leverage AI to make their internal operations better and faster and more efficient. We're doing the same thing at Reach. To Atin's point, there are some pieces that truly require human judgment, and that likely won't change. But there are a lot of pieces that we can probably automate that would be like a traditional analyst. If the question is how would it change the broader funding landscapes, I think one of the questions you asked was capital raise. My hope would be, given the efficiencies that AI gives you internally, you could actually build, to Katelyn's point, bigger companies with much smaller, scrappier teams and less capital required to do that. So my expectation would be that would be the case. I think what's funny is that it's gotten cheaper to build a company over time, and yet we raise much larger rounds over time. So the dynamics haven't necessarily panned out that way. And I would say the last piece, which is a bit of a broader point, is with the focus on AI, I think more so than ever before, we're keeping an eye on what the larger incumbents are doing. I know one of the cliche questions that folks used to ask is, what if Google does this? Now I genuinely am curious, what if Google does this? Because there is a lot more resources going towards their education product, and they obviously have built-in distribution. And so that's the other thing I'm considering as the broader EdTech market with AI.
Cool. Amit?
Yeah, I think kind of we talked about like AI, some of the use cases that we're seeing happen in the edtech space. Like it's like content creation, for example, is much faster and potentially less costly. I would say like analyzing data and trying to drive some type of insights or conclusions has been a popular use case. And so, actually then personalizing learning experiences like can be done much more effectively. And so I think ultimately, as you kind of see this being introduced into the ecosystem, it becomes much more accessible for more entrepreneurs to like access this type of capability and incorporate into their platform. I think fundamentally, what I think is going to like be even more crucial for roles is going to be kind of understanding what it is that is driving customer value, right? I think it's going to be that much easier for somebody to kind of create a company that is a lookalike that does something similar, that does offer something similar. And so I don't think this is different for kind of entrepreneurs or investors, but like kind of really like focusing in on what is it that customers want? How do you become that top three problem solver for your customers? And then kind of continue to ensure that, hey, even if I do have a significant number of fast followers that enter into the market, or some of the incumbents that do start to offer these functions and features, I'm still going to have that long-term competitive moat. And so I think really trying to zero in on that, have second degree and third degree conversations about that is going to become fundamentally that much more important.
I think there's something really interesting about that customer point. I think it's Paul Graham that said investors are easy to fool, customers are not. And I think that AI and venture can help you, VC, help you avoid errors of believing in companies where there is like you like want to believe the story, but it's not going to work out. Kind of make avoid some of the errors of putting capital into a company that is going to have venture outcomes. And then I think one thing that sometimes gets missed in edtech is just that venture capital is a power law business where one or two companies will make the vast majority of your returns and maybe half your portfolio will fail. And a lot of education businesses that are not necessarily venture backable can have much lower risk but lower reward, or they just have a different risk profile. And so I think that to the extent that AI can maybe put some of those companies with a different risk profiles into a different bucket and get them like revenue-based financing or venture debt or something that's not venture capital for equity would be very interesting for the sector.
That's fascinating. So we're at time. I'd like to thank all of the panelists and thank everybody watching. I'm going to move now to the lounge. We'll see if we can make that work, but we'll be hanging around for a few minutes to answer any questions that we didn't get to. So it was great seeing all of you, both on the screens and in the chats.
Thanks a lot, Mike.
Thanks, Mike.
Okay.